All right, guys, so you are welcome to this class. I think this is our third class for audit, advanced audit and assurance, paper 3.2. And we've actually gone through the ethical concept, because if you want to engage in auditing, you have to understand who you are as an auditor, the legal position of it, the ethical position of it, the regulatory position of it. We've done ethical and professional issues, and now we want to actually zoom into starting the audit. So today we want to do something about audit of financial statement. That is where we are now. Audit of financial statement. We want to see the approach. All along, we've been doing ethics and practice management, and discussing the things you should do before you even start the audit engagement. So assuming that you've gone through that bit and you've now been given the assignment to audit an entity's financial statement, what are some of the things that you have to be engaging yourself in? And that is what we want to start today. So in audit of financial statements, we will be looking at audit planning and documentation. We'll be looking at audit planning and documentation. Because if you want to start anything, you need to plan. Anything at all, you need to plan. Anything at all. You plan before joining this class. So anything at all, you need to plan. Okay. So, and number two, what we will be looking at is evidence and testing. After planning, you will be looking for evidence and you'll be testing. Okay. That is then the second thing we'll be looking at. The third thing that we'll be looking at the conclusion bit. When you are concluding the audit, you are looking at conclusion or finalization. So after you've gathered your evidence, the summary of it, what do you go through? So in terms of auditing a financial statement, these are the things that we are going to look at. Okay, now let's start with the audit planning. Audit planning. Audit planning. Before anything at all, we know that ISA 200, which talks about the overall objective of the independent auditor in the conduct of an audit. So we look at the overall objective of an auditor, of an independent auditor. In the conduct of an audit. Now, what does this standard say about the independent auditor's overall objective in the conduct of audit? It says that number one, and which we've already discussed before, is that the auditor is supposed to obtain what we call reasonable assurance. Reasonable assurance. All right, and this reasonable assurance is about the financial statement as to whether in whole or in part is free from material misstatement, okay, so that he will be able to express his opinion that the financial statement in all material respects is true and fair. So he needs one, reasonable assurance. That is the first objective, okay? And the reasonable assurance he needs is that the financial statements in whole are free from material misstatements. Okay, and in that case, it will enable him to express his opinion whether the financial statements are prepared in all material respects according to the financial standards. All right, so FS, financial statements prepared according to the applicable standards. If you remember, this one is part of the element of an assurance engagement. Okay, so that is the first thing the auditor needs. The auditor needs to obtain reasonable assurance. Now, the standard also says that number 2, the auditor is objective is to report on the financial statement. So you report on the FS, your financial statement, and communicate as required by the standard. All right, so you report on it, and that is what we mean. So this part is actually talking about evidence, and this part is talking about forming the opinion. Okay, now in our very first lecture, I quite remember I mentioned to you that for the auditor to be able to achieve these 2 objectives, then it means that ethics has to come to play. We need to know the ethical regulations so that you can comply with the relevant ethical requirements. At number 2, we also said that to be able to achieve this objective, the auditor needs to practice what we call professional skepticism. And this one, we explained that he has to plan and perform his audit with a questioning mind, All right, that is what we said. And once he's able to do that, we expect the auditor to also exhibit what we call professional judgment. This one is objectivity. He has to be objective, straightforward, okay? And that is how he can achieve this objective. The last thing we mentioned was sufficient and appropriate evidence. Sufficient and appropriate evidence. And this here, we'll be looking at audit risk. Okay, so these are what the auditor needs to achieve. These 4 things are what he needs to achieve these 2 objectives. Okay, so that is what we are going to actually delve into that much. That said, let's look at the audit, the planning of an audit itself. So we know that this is the objective behind everything that we are going to do. This is the fundamental ground of everything we are going to do. That said, let's now go into the planning itself. Let's go into the planning itself. So we look at audit planning. Planning on audits of financial statements. And the audit standard that we're going to focus on is actually ISA 300. ISA 300 talks about planning and audit of financial statements. All right, and it actually says that the objective of the auditor is to actually plan the audit. So you have to plan the audit. Why are we planning the audit? We are planning the audit so that we can be able to carry the audit in an effective and efficient manner. Efficient manner. Because without planning, you have no direction. So that is why we need to plan. The standard goes on to actually break the planning, the audit planning into two concepts. It says that the process of setting these specific standard has to be outlined so that it will guide you in conducting your audit. And so the standard actually groups this planning activity into two. So on one side, we have the overall audit strategy. On the other side, we have the audit plan. We have the audit plan. Now, what is going to happen is that these two documents are what you are going to actually outline. Before any audit starts, you are seated down, the overall audit strategy is communicated, the plan is seen before you even step into the client's office. That is what happened. Now, the overall audit plan actually states and sets out the generic term of how the audit is going to be carried out. So this one is very generic. It states the generic term of how the audit is to be carried out. That is what this one does. In terms of that, what is set out in terms of the general terms of how you are going to do audit, it actually sets out the characteristics of the engagement. So you will see from here in the characteristics, you see from here what we've talked about, the ethical consideration. You will also see the scope. You have to know the scope. What scope are you going to do? On what grounds are you going to do the audit? FR, let's say the financial reporting framework. That is the scope that you are going to do the audit. You also need to know the industry-specific requirements. Because you need to know about the client. You need to know the industry that the client is inside. All right. Then, in terms of the generic characteristics of the engagement, you are now going to look at the location component. The location component. Where is the client? Where you are actually going to. Not only does it spells out the overall strategy, the overall audit plan also spells out the reporting objectives, how you are going to be communicating. How you are going to be communicating, the timing of the audit, the timing, when you are starting, when you are completing, okay, and the nature of communication. So if anything, if you discover anything, how are you going to communicate? Very, very key. We've talked about ISA 250 laws and regulations. We have also talked about fraud. If you see that they are not compliant, if you see that there are fraudulent activities, how are you going to communicate? Very, very key. Very, very key. All right. In terms of the timing of the audit, we know that there are interim and final reporting or final audit. You know, sometimes people think that audits actually start when the year has ended, but there are interim audits where the external auditor can come to the ground somewhere in October, November to do an interim audit. Then before the February ones that they normally come into your offices to come and do, okay? So it is spelled out in the audit strategy, the timing of the audit, whether interim or final, and the way you will be communicating, especially in terms of communication, especially we are talking about the management representation. We will look at this later in the course, what this thing is about, okay? Management representation, management stand on certain issues, okay? Then another thing that the overall objective looks at is other significant factors. Other significant factors. So we are talking about preliminary engagement activities and the knowledge that you will be gained on other engagements. You bring them all together. So you are using these significant factors to actually look at key risk areas. You look at key risk areas. You are going to also check the effectiveness of the controls, and any relevant development that comes, okay? Anything that actually comes up. That is what you are going to look at. Then lastly, you sit in your team in your office, determining your overall audit strategy by looking at the nature, you look at the timing, and you look at the extent of resources that you need to provide. Resources for the audit that you are going to do, okay? So we are talking about staff, we are talking about financial resources. So this one, we are talking about staff, we are talking about financial. But sometimes the audit, you have to travel. So when you look at your overall audit strategy, these are the things that are spelled out in it, okay? So I actually saw a past question that actually said that one of the ISA 300 talks about the objective of planning and audit and mentions two documents, the overall audit strategy and the audit plan. Spell out the things that you will be stating or will be discussed in the overall audit strategy and the audit plan. So I feel like going back. So this one is typically audit and assurance stuff, but it appears in advanced audit. So I had to go back and bring it to the scene. All right. So these are the things that gets into the overall audit strategy of an audit engagement. Now, whilst
Hello, sir.
Yes, any question?
Please, yeah, please. After the significant factors, the next
Okay.
one is what? Is
The
what?
nature, timing, and the extent of resources that you will need for the audit.
Oh, okay. The nature of timing. Okay.
Nature and timing. Now, whilst the overall audit strategy talks about generic terms, the audit plan is very, very specific. It's specific. It is detailed. It is very, very detailed. Now, it spells out the detailed procedures that you will carry out, okay, in the implementation of the strategy and also to complete the audit. So that one is very, 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 very detailed. Now, majorly, you will normally see it outlining. So it actually outlines the nature. That is the description of the work, of the audit work or the engagement. The nature. It also talks about the timing. Those things that you are seeing here, the timing. But the timing here, we are looking at the time that you allocate for the audit. Now, most of the time, they normally come and spend like 1 month, most of the time. Okay, depending on the size of the firm. All right. So that you need to allocate the time. The audit plan actually outlines the allocation of the time. And the extent here, that one shows us the point to which evidence that you gather, the evidence that you gather is enough. the evidence you gather is enough. So at what point do you say the evidence that you have gathered is enough? Now, these are the two differences between
Please can't see the screen.
Really?
I can't see the board rather. Yes, it's T.
Please
I think
confirm.
the screen is showing.
All right. So both the audit strategy and the audit plan are what you need in terms of planning your audit. The strategy is generic, so general, but the audit plan will actually spell out. So when we talk about this scope, it will break down the scope deep down. You are actually going to do so and so work. Like it is actually a breakdown of it. So it is detailed. The strategy will make it so generic, but the plan is actually detailed. Now, both of these documents that you see, the standard says that everything that you do must be documented. And now you see that in terms of bringing this one out, you see both the plan and the audit are documented in what we call the audit planning memorandum. So they will draft a memorandum. It's called audit planning memorandum. Okay. Audit planning memorandum. Now you see that if you have been engaged in some audits before, you see that the auditors will be having some kind of scale of work. So when they do A, then they tick. If you have also been involved in an audit before, that is, you are holding a time schedule, an activity schedule. Whatever you do, then you will take. So even when they come to your office, so what you normally see is that 2-3 people have come. All right, in the team, you have like 2-3 people. Each and every person is having a specific job that he's doing. So probably one is testing your PPE, the other one is testing something concerning your cost of sales, your revenue. So that is that. So everybody has his own. And inside the testing of revenue, so here, that is the generic thing. So this one is doing revenue, this one is doing assets. But inside it, you will see some specific things. At what point is materiality examined? You will see it. So there is some guidelines there. The audit team member is actually using to do his work. Okay, so that is what we are talking about. Generically, the team lead will have the overall strategy, which is now broken down into his or her team members in a form of audit plan and documented in a memorandum, which they are holding. All right, so that is what happens. That is what happens. Okay, now in a very small scale entities, you see that the memorandum is very, very brief. And the audit plan, you see it's so tailor-made. Okay, so that is what happens. That is what happens. Now, why do you need this audit plan? In fact, whenever you are asked such kind of questions, you still have to do what I go by talking about common sense. Now, when it says that, what are the advantages of audit plan? It's just a question of the advantages of planning. Okay, so let me just put in here some advantages of audit planning. Now, why do you plan? Why do you plan? You plan because you want to establish a standard or an objective. You want to achieve something, okay? So just to establish a standard or an objective. That is why you plan. You sat down, you plan to do this course, to join PTS, and that is your objective. All right, the next thing you realize is that your plan actually gave you direction. So planning gives direction. It gives direction. It helps you to save time. That one is obvious. And planning, it actually becomes the standard for review. The standard for review. I like football a lot. And just yesterday, my team, Liverpool, who has been suffering this season, were always playing 4-3-3 formation. Now, senior man club wanted to change the formation to 4-4-2, sorry. And this is the first time Liverpool was actually playing 4-4-2. So they planned it, they rehearsed it for one time. And when the match was over, we've given Rangers 2-0. He was asked the question and he said that was the plan. And per what the players showed on the pitch, they exhibited the plan very, very well. So it aided him to do this review that we are talking about. Not only does it become the standard of your review, it also becomes the standard for measurement of performance, all right, of measurement. So that is what planning is all about. That is what planning is all about. Okay, so this said, let's quickly delve into ISA 315, which is very, very interesting as part of your planning. So as part of your planning, after you stated everything, yes, any
Hello,
question?
sir. Yes, sir. Please, can you go back? I just want to ask you a question.
All right. Oh, you can still
The
ask your
previous-
question.
No, it's on the slide. I want to ask you. I was not seeing certain things well, so I want to.
Oh, okay. Yeah, this part, right?
Yes, sir. So it outlines the point number 3 on the, is it external or what?
Which one? This one?
Yeah, what is that?
Extent.
Extent.
Yes. The level, the limit. At what limit do you say the evidence that you have gathered is enough? Okay.
Okay. So what is the explanation there? Is it point or what?
Yeah,
Point
that's
to
what
which?
I said. At what point? The point to which the evidence that you gather is enough.
Oh, okay.
Yeah.
Okay.
Is it okay?
Yes, sir.
All right. All right. So now you've sat in your office. This is what you do before you even step out. These are the things auditors do before they even step out of their office and come to your office. Now, when they are about to exit, the standard says that they need to also apply what we call the standard of ISA 315. Now, ISA 315 is saying that after they've done their plan, everything in their office, the next thing that they should be doing is to identify and assess the risk of material misstatements, okay, through understanding of the entity's environment. So you have to understand the entity and also its environment. You can't just pop up to audit a client and you don't even know the industry of the client. Okay, so you need to understand the entity itself, okay, and the environment that they work in. So there is a relationship between risk here and understanding. That is the relationship. Okay, that is the relationship. So what the risk what we are talking about here is that you have to actually know something about the client. You have to know, because if you don't know, there is a risk you will see later on in this class that there is something called audit risk. You will see why we are talking about understanding the client and its entity. All right. Now, if you are checking a transaction, what is the industry's way of it? How should it be? Okay. You know, sometimes in some industries, I have been in the petroleum industry before, and sometimes the way you think things are is not how they are actually in terms of the reality of life. So what you know in the book might actually be different from what is actually existing on the field. Okay. So what this standard is saying is that you need to get a real understanding of the client. So you need to really understand the client. Now, you need to understand the entity first. You need to understand the entity, okay? Because who are the people who owns the entity? Ownership, control, all right? Operations. Who owns the company? Remember when we were doing money laundering, we talked about KYC, know your client, all right? And it is a risk, because if you don't know your client, I mean, there are certain things that you may think is normal, but if you know the integrity of the client, it helps you to understand what the entity is all about. All right. You need to know those who are in charge of governance. That one, for at least reporting sake, you need to know those who are controlling the company. And you need to know how the company operates. Okay. It's very, very, very important. Very, very important. Okay. Not only do you need to know the entity itself, you need to also know the industry. You need to understand the industry, okay? Because this one will help you to determine the risk of material misstatement. Later on, like I said, when we get to that bit, you really understand what we mean, okay? Really understand. Now, I will need you guys to rejoin so that we will actually delve into these understanding bits and quickly move to audit risk. Audit risk.